Do you buy it, Amrita? I've got Deutsche Bank looking for oil prices. I've got a select set looking for a dash over $100 a barrel. How certain can you be of any direction of oil?
I don't think you can be very certain in the near term because of the variant. Also, it has been a very mild start to the winter. There's obviously SPR concerns with the U.S. government still releasing strategic reserves. So in the near term, I can see why prices are under pressure. But we've held a $100 plus price forecast for 2023 for a very long time, for the past few years, because as demand recovers, the real story is around underinvestment. That OPEC just doesn't have enough spare capacity as we progress through next year. I mean, if you look at Latin America, Brazil, Ecuador, Mexico, pretty much all these countries, Russia is struggling. We just haven't been investing enough. And with all the focus on ESG, we aren't putting any money into oil upstream right now.
So, Amrita, walk us through what this means in terms of production. Does it mean that they just haven't been drilling and there are less oil resources available? Or does it mean that the actual supplies that they need to use are more expensive and there's a restrained supply of labor to help them do it?
It's a great question. I think, look, it's a bit of both. In the U.S., particularly now, you are seeing a lot of constraints with regards to labor availability, equipment, or just high-quality rigs. Right? I was in Houston just recently, and I was being told that if you order a high-horsepower rig, you have to wait a year now versus just 3 months in the past. So there are some short-term shortages, but fundamentally, I think the first point to make is more valid. It's not about the reserves. There's plenty of oil underground. There always will be. It's about what price at which you get it out, but more importantly right now, whether there is any appetite amongst shareholders to allow companies to get it out. I think this whole focus on cleaner energy is leading us to this path where nobody is being incentivized to pump oil, and that's why you are seeing the kind of discrepancies between demand and supply. OPEC, of course, or national oil companies still have an incentive to drill, but because of the price crash last year, budgets have been absolutely hammered, and that's why there just hasn't been enough rigs put into the world.
And we anticipate Baker Hughes, of course. Amrita, I'm interested in your perspective on WTI versus Brent at the moment. Not much in it from a price perspective, 70 versus 73, but could that widen at any point? What would get us there?
I think it could actually narrow over the course of next year if exactly what we talked about with U.S. production disappoints. Right now, the U.S. is almost pricing, because all of the oil from the U.S. is kind of coming to Europe and Asia, in part, and I know you guys were just talking about Madame Lagarde over there, because natural gas prices are so high in Europe. Refiners here actually want that WTI quality crude. So it's become a pull. But then if U.S. production doesn't grow as much, U.S. refiners are going to want to pay up to keep those barrels at home. And that's why I think WTI Brent can actually narrow.
Talk to us about gas prices. Whipsawed today. We saw significant drops in European gas prices as Russia suddenly decides to turn on the taps. But are we going to just ride out volatility here on out?
Oh, that's going to be very, very volatile. And like I was saying, it hasn't even been cold yet. We actually predict very low stocks. And I think unless and until NS2, so Nord Stream 2 can start up, which we don't think is going to happen till September, we don't even see how we're going to refill gas inventories over the summer. So it's not a first quarter thing. It's a full year thing. And if it does get cold, let's say over the next few weeks, then stocks will get to extremely low levels. So absolutely expect a lot of volatility in European gas prices.